Everybody, it's Pete. Welcome to today's episode of today's Best Stock Picks. It is Monday, June 15th, 2020. A lot of people took their lumps last week, and really I believe it's because we're only looking to one side of the market, and the fact that many people were believing that the market could only go up. If you watched last Monday's Best Stock Picks, you will see that about 3 minutes into the video, I said that based on reading the tape, that I was looking for a pause or a pullback and looking for stocks that declined to look for a spot to buy. We felt that there was a sell the news possibility where we were expecting the Fed to not do anything, which is exactly what they did. Their language is a little stronger than what the market liked, and we pulled back. So we were positioned prior to the massive decline to expect a pullback, lightening up positions, and we saw that in the community where a lot of the new traders, it was kind of interesting, asking why we weren't trading that much more actively. And really my job was to walk people through that if you didn't prepare for the decline, if you didn't prepare for the pullback, if you didn't have a profit target in mind or a percentage in mind that it was acceptable, at some point we kept using the term musical chairs, that the market might pull back and you needed to be prepared for it. We literally called last week that the market was going to have a hangover and looking to sell the news and looking for a pause to a decline. We got it in a much bigger way. So thankfully we avoided getting steamrolled, which congratulations to everybody in the community who listened and didn't overtrade last week. We did buy, we dipped our toes in a little bit last week towards the end of Thursday and into Friday. Friday morning was actually a pretty profitable morning, and then really didn't trade that much after that. I do believe that today is going to be an opportunity to look to initiate some new swing trades. I think that today is going to be a day where you really need to be on top of what you're doing. Here's the key. So I want to get this across right at the beginning of today's stock picks. By the way, if you find these videos helpful, absolutely click down and subscribe. That would mean the world to me. And share it with your friends. That would be kind of cool too. But here's the thing. If you are swing trading, you now have two very specific levels, and three actually, if we're talking about the market and the SPY specifically in general, is that you're going to have today's opening, which will be Monday's opening price, and today's candlestick will either be red or green based on where it's trading, right? So here's the opening price, you have above or below that. But that's also going to represent the weekly price. So if you're looking to be a buyer this week, you're looking to be long in trading terminology, that candlestick needs to be green because we have a conflict in multiple time frames now where most candlesticks had the severe move to the downside where the monthly, weekly, and potentially today the daily candlestick will be red, which makes it difficult to look for spots to buy. Very different when you're talking about all those candlesticks are green and you get a lower opening. That's kind of like a sneaky entry that is a really good smart trader entry where you're focusing on the fact that all those candlesticks are green and that lower opening represents nothing more than a buying opportunity, which brings us to today and brings us into this week. Should you be buying today's lower opening? I feel like the distance between the profit target and your potential entry today has expanded enough now where we can start to look for new entries. But, and here's the part that so many people miss, you need to wait for price to confirm it's stopped and you have good places to manage risk. You don't buy just because it's going down and you like how far it's fallen. That's the way to get creamed. I'll tell you that right now. So heading into today, and this week, I think that last week, a little exaggerated to the downside. I think that we're getting another open lower this morning. And I'm going to start to look for stocks that have pulled back at least for 2 days. And those that have pulled back even a little bit more that were strong prior to that will be the ones that I'll be getting a little bit more aggressive in. And when I say aggressive, I mean that I'm going to be looking to build a position. Again, as long as the week stays positive, I will hold those trades. And as long as the month is negative, and I'll show you exactly what I mean by that, my conviction level won't be the same. If the month is negative but the week is positive, it's more of a short-term cash flow type situation. If the month should happen to go positive, and obviously we're talking about June right now, and that June candlestick turned green, we can get a little more aggressive. The one thing that's big that we need to pay attention to right now is the SPY and the 300 level, the SPY ETF and the 300 level, or the futures 3000, and the 200 period moving average. We get above or below that, that's going to really kind of dictate what we're going to do. I think we might see a little bit of a bounce this morning, but again, let the market be positive. You do not want to be bidding into stocks that are going down. A lot of people had a problem with that last week, where they were bidding into stocks that were clearly in a short-term selling order flow without the context of a longer-term bullish move. And actually, we saw that in a couple of stocks where we made a really big distinction between a stock that's been strong and clearly bullish since the bounce in March and before that, prior to the pandemic, versus stocks that had 2 or 3 day rallies come back and crush a lot of people because there was no price history from the smart money holding that up and supporting it. The longer the price history means that the more money was committed by the smart money, more money was allocated for that long-term idea. But if a stock only rallied for 3 or 4 days, there's not a lot of history. And we saw that in GNUS, we saw that in the airline stocks. So you really need to dig in and pay attention to how much smart money was committed to the idea you're about to take. And if you're not sure how to do that, that's the difference between short reading and tape reading. Scroll down and learn more about the boot camp and spend 30 days with me. It's a tiny, tiny investment compared to what we risk in the market every day. But anyway, we're going to get into the charts right now. And if you have any questions, absolutely scroll down and you can leave those below the video. But what we want to talk about now is you can see the futures are actually trading lower, but they're bouncing a little bit, which is why I think today is going to be a period of a day to be bidding for stock. I think that if we open lower, push lower, that's not necessarily the buying opportunity, but if we crawl our way back to the opening price and the week becomes positive, then we're gonna be digging in. So I'm actually gonna go to the daily charts. It's ironic that I have it up here because somebody asked me this weekend why I don't use moving averages. But what I'm gonna do is I'm going to pull up the SPY, because that's the level that we're watching. You can see the SPY for 2 days did everything possible to hang on to that key 200 period moving average. I use the simple moving averages, but I don't use them in my daily analysis. It's kind of like my last thing where I just want to pay attention. And this is exactly what I mean. I want to know that where that number is, where's the 200, and it's kind of like right at the $300 level as well. So really significant reference points. Not only if we're trading below it, that's not good to be a buyer, but if we crawl our way back above that, it's going to be interesting. So getting into the weekly charts, just to give some more context, you can see that we had a giant bearish engulfing candle, which basically means it took out the high and the low and closed below the open, which is exactly what we're talking about for this week. So we want to see this kind of candle, this green weekly candle, for us to be long both in the market and in our stocks with a higher level of conviction. And we certainly want to see a higher low formed here and hopefully crawl our way back up and become well bid again. The monthly candlestick, which is the June candlestick, you can see is teetering on turning red, which if we open lower, we actually will end up becoming a red monthly candlestick as well. So the theme for this week and the theme for today especially is, can we get back above the open on the monthly, and can we maintain the weekly bullish tone by being green as well? So just so you can write down the number, the open for the month is 303.62. So that's the level to pay attention to. You can see that we're down around 303.85. So ballpark, again, it's few hours before the market opens. It's not going to be as significant until after the market opens, but you need to know those levels. So I'm going to get rid of the moving average. I'm going to talk about some. We actually have a couple of short sales today. BMY, actually, I do like this as what we call a saturation play if it does certain things as a potential buying opportunity. Too much to discuss here. That's actually part of the order flow masterclass if you get involved in the boot camp. But as far as stocks looking for a short sale and getting into the context of what we just said before about how much money was committed for your idea by the smart money versus did it just recently happen? So you can see we were actually at a new high, but now we have roughly 3 weeks of selling in the stock and now 4 days of closing below the open and 3 days of well offered. So I am looking for it to open lower. If it opens lower and pushes hard, I actually would be considering to trail that really tight and see it get down into a saturation level. But it's kind of interesting that we actually do have a stock that could potentially be a sell short. But from a tape reading perspective, now that it's the 4th day heading into the 5th day, it's not going to be something I'm going to carry overnight. I would actually be looking for this to open lower, find some support at that saturation point and look for a spot to bid. Campbell's Soup is another one. Not quite triggered yet. It needs to trade below these levels. Probably down around 46.75 to initiate a sell short, maybe some short-term support here at 45, but down to 41 would be the ultimate target. Again, short sales are opportunities that are fighting the longer-term order flow of the market. I'm just preparing everybody with some stocks that have relative weakness should the market continue to follow through to the downside. Merck, very similar to what we just looked at before in Campbell's. Not the greatest idea to be short selling support. These are more trades to be looking for them to break support, pause, and then look for the new trade through that level. Let's see, we also have Walmart, which actually is a little bit of a better sell short. We actually broke the support, looking for it to have another down day, if not pause. For the longer it pauses below this level, the longer it pauses below 120, the more I'd be looking for it to retest 100. But we've seen a lot of stocks, and actually one that we're going to take a look at in a second, that did break support and had a vicious rally back in the opposite direction. So again, Walmart needs to pause for a couple of days below this level for me to want to build a position. If it opens at yesterday's low and trades below that level, I will be looking for a sell short. But again, not aggressively. This is really more looking to initiate small trades in relatively weak stocks. And if the market should happen to have a new direction to the downside, I'll already be positioned in a small part of my trade. If the market catches a bid and goes in the other direction, it's not a big deal. The trade did not follow through. The market didn't follow through, and you take a small loss on the trade. So Roku, actually another one. Roku actually broke that support that we were watching for a while there, around 115, 116, pausing below there. Now, I'm pulling up Roku because actually somebody emailed me about this over the weekend. If you look at the Roku chart, we're seeing a lot of melted candles, small-bodied candlesticks. That's a lot of indecision. What most traders do that separates them from their capital is they get involved in stocks that aren't moving. And in this case, the stock really hasn't done that much in a couple of weeks. So I won't be looking to do anything in Roku until we see the stock go well bid or well offered and closing near the highs or the lows in the context of that well bid or well offered. So this is a really good example of a stock that you could potentially build a very weak argument in being short, but there's really no momentum. There's a lot of indecision, so you shouldn't be putting your money into it. I'm not putting my money into it because there's nothing going on. You're basically just guessing. Something else we want to take a look at, actually Chewy, one of the stocks we're looking at today, which is doing a similar thing to here, where we said this is the reason you want to see it get below a level and pause before you even think about shorting support. And look what happened. The stock just got shoved back in the face of anybody who shorted here and did not wait for confirmation. But now we're actually seeing the stock consolidate between 48 and 52. I'm putting it in my game plan for a long above 52. I'm not doing anything while it sits in that trading range. DKS, interestingly, relatively strong to the rest of the market. So again, same way we're preparing a little bit of relative weakness there before in case the market stays down there. We are looking at a stock that is showing relative strength compared to what the market did last week, closing on the high. So buy stop in DKS above 40. That's the level we're looking for there. Square is another one that actually was at all-time highs and is consolidating again. I do not want to short sell this stock, despite the fact that it's opening lower. Anytime a stock hits all-time highs, you must buy the first pullback. And looks like we're going to open up somewhere down 84, 83 and a half. I will be looking to bid, again, provided we're above the open and we start to see some intraday order flow matching this longer-term multi-month order flow. Next, we have Lulu, which actually had earnings last week and got beat up on earnings, and it's actually down another $9 now pre-market. Little different story here. There's a difference between a pullback with the rest of the market versus a change in the company's earnings. Lulu, I'm going to let settle in for a couple of days and absorb the earnings beatdown that it took. It was surprising, but that's what it is. We're not going to trade a stock long that has really disappointing earnings right now. Just the fact that it pulled back, and this is the difference between trading and just reading the charts. There's more to it than just what's going on in the charts, and this is not the same as what we just discussed before, because the pulling back from all-time highs with bad earnings is a change in this story. So that's a little different. So we're going to wait on Lulu and see if it settles in a little bit. Square. Okay, we just gave our update in Square. We're going to take a look at Beyond, BYND. Very active for a lot of traders last week. As long as Beyond is above 140, which is kind of teetering on that level right now. 140 is the line in the sand where I want to be long above 140, looking for another run at the 165 level. If it trades below there, I'm letting it go. Next, we have DKNG, which was very strong. And you can see a really clean pullback. And again, don't make this more complicated. Just look for a buy stop above the levels. looking for a retest of the high. So we're actually opening a little bit lower. Again, like with everything else we're talking about, I do like this long. It just needs to break this pullback. Really that simple. If we do open up below 35, probably have a buy stop above that 36 level. Dish, another good one that we were trading last week. Pulled back now, what you might call a swing low on that candlestick. That's got higher lows on both sides. In this one here, we're looking for a buy stop about 33.25 in this one. We want to touch on, briefly on the stocks that were kind of popular last week. This is a good example, and we touched on this last week in Boeing, where it actually exploded, but there was only a few days worth of price history, so not a lot of smart money allocated there. And this move to the downside was quite exaggerated, especially if you're watching it here. It was pretty vicious. So I'm going to step away from Boeing for a day or two and let it get a little bit more traction on either side of the market. Penn has been one that we've been watching, the gaming stocks quite a bit. Inside candlestick and Penn looking to open a little bit lower. This is the part that scares me. And again, this is what reading between the notes versus just looking at the moving averages. 1, 2, 3, 4, 5, 6 days in a row where the stock has closed below the open. So there's some selling going on in that stock, going back to the Friday when the market was actually strong. So you had the strong market Friday selling. So they sold into the market rallying. Then you had Monday, Tuesday, Wednesday, Thursday, Friday of more selling. So we're actually going to open up a little bit lower. I still like Penn long. It's a little bit longer term bounce. This is actually a bounce from March. But what's interesting here too is the story, the narrative was about the world opening again. And that's a regional gaming company. So if that narrative is changing again, where we might be seeing some further outbreaks, the story on the stock has changed. So I'm not going to trade it as aggressively as we did when it was bouncing to the upside. So it's really more something to put into the watch list. And W kind of fits that criteria as well. But W is actually still in a multi-week trading range, almost a month and a half, actually, going back to the beginning of June. I have buy stops at 200. I don't want to trade it while it's in this mess. I want to see it get above that level. Obviously, Apple, all-time highs again last week. That story has not changed. But again, the market leaders move with the market. Some say that they move the market themselves. I am going to be watching the airline stocks. I'm going to be watching the market leading stocks. But I want to make this clear. The same way that I called the market pause, decline, sell the FOMC news last week, this week I'm going to be a little bit cautious to really create I'm going to force the market to show me I have really good risk points. And I just gave you examples of how to read the tape, which is watching that weekly and monthly candlesticks in the market and your favorite stocks, and then forcing the market to be moving in your favor before you decide to look for a buying opportunity. During that ripping move to the upside that we had for a few months, it was I'm not going to say safer, that's the wrong word. It was a higher probability trade to see follow through because so many stocks and market indices were all pointing to continuing. That changed, that the VIX exploded, and now we have a little different narrative. So what's the key to this week? The key to this week is reading the tape, seeing change positive from the open, seeing if the monthly can also change. If it doesn't, and you're not comfortable selling short, step aside. There's nothing wrong with being in cash until this picture makes sense to you. If we do have those opportunities, start with, I can't tell anybody what to do. I'm starting to build positions because some of these stocks, quite frankly, and even specifically the market, have pulled back so dramatically. If you loved it 2 weeks ago, we have some prices that you could really sink into now, provided the market shows us momentum, shows us short-term buying, and shows us some clean risk points. So let's go get them today and be super disciplined. Here's the key. If you don't understand what's going on, there's nothing wrong with being in cash until you do. That is smart trading. Speak to you soon.